All right, so welcome to today's session. And as I said earlier, I said we would be focusing more on using the line charts today, yeah, support and resistance. Now it's called more of, I think it's called the Malaysian support and resistance or whatever they call it. But we basically use more of the line charts, as I said. Now, we already talked about our normal support and resistance, and I got to show you how you use your lines. And I was like, okay, when we have something like this, where we have price repeatedly coming on a particular zone, yeah, we call it what's more of support and resistance and stuff like that. But today is going to be different because why I actually wanted to show more on this is because the line chart is more precise. It gives you more accuracy and a very smooth chart, right? So here we have GBP USD on the daily time frame, right? As usual, the support and resistance or the line charts, whatever I want to talk about, we mostly use the monthly time frame, weekly, and the daily time frame to get our key levels, which are the support and resistance zones. And you can trade them accurately, even without combining any other methods. You can simply use the support and resistance, the S and R, and little confluence on liquidity. Yeah, and you are good to go. So let's take for example, this is GBP USD on the daily time frame. So we are going to switch to our line charts. Now coming to my line chart, you can see everything is displaying here, right? You can see how it's displaying. It's not like the other one that is having wicks and all of that. So looking at this, when we are on the line chart, what can you see? You can see that basically we have price coming here. This place is more like a support, another support here because it's an high. When we have price break through this level, automatically it becomes a support that we expect price to come into, right? This is a support. This place is also a support, right? This place is also another support, and right here we have another support, right? At this point here they have another support at this point. So when you have done all of this, all you need to do is to switch your what is it called, your charts back to your normal candlestick chart. Now it's more of like I'm carrying out a live analysis on this, but we shouldn't go there. Now when you are using the S and R, which is the Malaysian support and resistance. S and R is just a short form of support and resistance. You are to focus more on the lines, yeah, and it will give you more accuracy that way. Let's take for example, let's use previous price actions. The way it works, you are supposed to connect when you see the chart already that has already been formed. When we have something like this, one, this, two, yeah, we already have price coming to a particular spot twice, right? When it touches it this twice, what are you expecting? That okay, we'll have price coming into it the third time. Now the rules to it is that the first and second touch must be giving you an engulfing candle. Yeah, the first and second touch should give you an engulfing candle. The third touch might be a wick or whatever, but you should make sure the first touch and second touch are engulfed. Now let me show you a quick example about that. Let's take I think I saw something now. Let me use an example. Let me draw this from here. We have something like this. We have first touch, second touch right here. We have the first, second, and this is the last touch. But now when you are using this particular form, which is the line charts, you can see that price, you would figure that okay, this particular point is not touching. But now when we switch to our normal candlestick chart, you see that that particular point is actually touching that line. But you should make sure that this place is what? An engulfing candle, engulfing. Right, so let's quickly try and see. All right, so you can see that this point is what? We have an engulfing pattern, we have another engulfing pattern, and this place, okay, this place is not touching. Let me get another example. Let me use the 4 hours chart. Where is it? I still use a lot of examples today. Yeah, here. All right, I think I used some examples today. Yeah, at this point. Now, looking at this point, what can you figure out? You can see that we have, at this point, we have the first touch, we have the second, and at the third touch, look at what happened there. Now, switching back to the charts, what can you see? You can see that the first touch was actually an engulfing pattern. You can see we have a bullish engulfing here. We have another engulfing here. Now, the third touch, it must not necessarily be that it's an engulfing. You can actually use, sorry guys, I want to quickly fix something. All right, so the third touch must not necessarily be an engulfing candle. And now, one thing I want you to understand, your normal support and resistance, you will be saying, okay, why didn't I draw the line from where? From this week here, down like this. And when I draw it from there, you can see that we are omitting something actually. We are omitting the second touch and is not as accurate. But now, when you switch back to the line chart, what can you see? You can actually see that we have what? See here. We have perfect touch here. See how it happened. A perfect example of what? Support and resistance. Now look at what happened here. We have the first point. We have the first touch, second touch, third touch. Okay, at this point we have price coming here to react from it. Now, after we have price breaking through it, what do we have? A normal break and retest that I told you guys about, or I taught you guys in normal support and resistance. You can see how perfectly it was formed here. But now, when we have our normal charts, you will see that you won't be able to watch, to decipher, or be able to watch, to catch this particular trade idea. Because now, look at this. When we have something like this, look at this. It's not as accurate as whatever, because you would have already missed all the trades here. Look at this. We have the second touch, price went. We have this, price also pushed. So you wouldn't have gotten all of these trades. Now, if you also switch, let's switch back to the line charts. Now, looking at the line charts, what can you see here? All of these points that you can see a reaction, this particular point is a what? Is a resistance level. This place is also what? A resistance. All these points are key levels. Each and every one of them has what they denote. They are not just for what? For fun. Look at this. When we talk about the breaker blocks, we have something of this nature. Easy. You can easily catch the trades. Instead of using what is it called? The normal candles that would have missed a lot of the trades. Look at here. Now look at these points. Look at it. So the Malaysian what was it called? Support and resistance, which is the line charts, are very, very much powerful. And these days I started using it like a month ago. And since I've been using it, it's so massive. Like, it has been giving me a whole lot a whole lot. Now look at this point. How would you be able to decipher what is going on here? At times you see a very long week. Look at this week, you'll be like, oh, what is going on here? How would you be able to read it? But once you switch to your lines, it will give you a perfect picture of what is going on the chart. Now look at this. Explaining this, look at just this little structure we have here. We have the lower highs, lower lows, lower highs, lower lows. Now, what did I told you about on the algo structure? I said we have point A, point B, point C, and the point D, right? Which is this point. We have the point C, and you can comfortably pick this point as your what? Your entry. Your entry level should be where? This point. Now, if you switch to your candles, you see how perfect it is. You can see it's more clear. But now on a normal stance, you might not be able to decode whatsoever that is here. But with the line chart, see how accurate it is. Points A, B, C, and D. Simple. And that is how it works. If you are to follow the support and resistance line, so can everybody still hear me, please?
Yes, you can hear it, sir.
Okay, thank you. Now look at this. Look at how clean these lines are. Another example. Let's use this. You can see how clean it is. You can see it touches. This week is omitted because I think this week here was as a result of a news event, a news flash here. So when you use this particular lines, it gives you more insights. Now take a look at these points. Take a look at the whole of these points here. Right, you can see that at times the candles are going below that support level, but when you change it to your line, look at it, they are all on the same page. Look at this. This is what a support level on its own. You can see still intact. You can see that. But now, if you are just using the charts, look at this thin line here that has dropped. You'll be like, okay, probably what we have price has already taken out that particular support. But no, it did not. So it's as what? It's as simple as that. You can just use it as an additional confluence to whatsoever thing that I've showed you already. But I think I just saw someone saying he's into trading and he just joined the channel. Now we have YouTube videos already recorded. Yeah, most of our sessions are actually recorded down, so you can actually go through them. Now take a look at these points also. The simple ABC pattern or ABC strategy I showed you guys. We have A, B, C, and what? Point D. Now looking at it, we have this point. I said point C is always what? An inducement, right? Point C is always an inducement, and we have what? We have price dropping. You can see. Now I'll be showing us just few examples on this SNR. I don't want to really go deep into it. I just want to introduce it. In the next session, I'll actually go deep into it. Now we have types, how they actually occur in the markets, right? Now I said we always enter at the third touch of the resistance or support level. So let's take, for example, we have a support level. The first type or example is something like this. We have price 1, 2, and now at the third touch, that is when we will be going in. You are not expected to enter at what? After the first touch. Now take for example, price tapped on it, went to the upside. You are not expected to enter at the second point because you are not sure if that zone is a what? Is a support level. As price might come towards to take it out. But now when price bounced on it the first time, second time and still broke structure to the upside, you can comfortably say what this particular zone is what is a support level. And when you take it, you target the next high and you are good to go. And that is how it is. Simple. Now the next example is something similar. All of them are just something very similar. We also have the reversal pattern also. Yeah, I think I have few of them here that I already jot down. We have here, we have something like this. 1, 2, and we have this. Now, when we have something like this, you can see the first scenario I gave to you. We have price coming the third time, tapping it and dropping, right? Now, after price drops, you can just wait for it. Like, let's say, for example, price tapped on it the third time and pushed to the upside. They are not expected to take the next trade on the fourth touch because that particular zone might be weak already. Now, let's take that this particular zone field, the third place you are entering from, and price came towards to take this particular level out. All you are expected to do is towards to take your trade from where? From this point, from this next point here towards to sell down. I have a clean example to this particular scenario. Let me show it to you. Now, take a look at this. Take a look at this. Now, look at what's happened here. We have, let me see, we have the first touch, second touch, and the third. Now, look at what happened. After price broke through these points, price came back into this, tap on it, and sold down. And we were able to still make some profits. Look at this. After multiple touches, price breaks through it. You enter what? At the next touch, price tapped into it and sold down. Simple. Now, the next example is something simple. Okay, this particular one method is called break and retest trend line. Yeah. Now, we also have the next one, which is called the reversal trend line. It's something like this. When price touched the first time, second time, and third time. Now look at this. Right, three, yeah. After the third touch, now you'll be expecting that price would come close to this point and push to the upside, but no, it's called a reversal trend line because after price touch the first, second, and third time, automatically we are expecting price to push to the downside. Now, when price push to the downside, that is when we will be able to have the break and retest trend line, whereby price comes towards tap into it and sell. So all these patterns occur like repeatedly, and that is how it keeps occurring. You can just take a look at this video and try to implement it, and you see how they work. They work very accurate. As simple as that. But most importantly, this particular pattern or this particular support and resistance work more perfectly on some pairs. Not all pairs actually you will be able to like use them, most especially if you've not like back tested them properly. So I think this is where I'll be stopping for today. As I said, I won't be going deep into what I've not introduced already. So I don't know if anybody has any questions for me. I think let me stop recording.